Okay, I want you to close your eyes for a second. Well, don't close them if you're driving, obviously, but just, use your imagination.
Right.
Picture yourself standing on the shoulder of, say, National Highway 48 in India, maybe somewhere just outside of Mumbai.
Hmm.
It's one of those scorching hot afternoons. The air is thick. You can practically, taste the diesel fumes and the dust.
Oh, yeah. It's a total sensory overload.
It is. It's vibrant, it's chaotic, and it is incredibly loud. And rushing past you is this endless river of steel. Thousands of these massive, colorful trucks.
You know the ones?
You know exactly the ones I'm talking about. The hand-painted flowers on the doors,
No.
intricate designs, horn please, written in these big, bold letters on the back.
Tassels hanging from the mirror.
The tassels, exactly. It's like a moving art gallery doing 80 kilometers an hour.
It's one of the most quintessential images of the Indian economy, really.
Uh-huh.
That chaos is the economy in motion.
It is. But here's the thing. Here's the question I want to ask you. Have you ever actually stopped to think about the invisible machinery that keeps that entire river moving?
Mm-hmm.
I mean, how did that truck physically get there? Who hired it? How did the driver get the cash to put 300 liters of diesel in the tank? How does he pay the tolls?
Right. All the little friction points.
All of them, because for the last 50 years, the answer to all of those questions was incredibly analog. It was like wads of dirty cash, it was tattered notebooks, and it was guys shouting at each other in roadside peace stalls.
It was. And, in a lot of places it still is. It's the invisible, completely manual backbone of the country. We're talking about an industry that's worth anywhere from, say, $100 billion to maybe $250 billion a year.
Wow.
It moves 70% of India's freight.
Okay.
But here is the stat, the one that really just stops you in your tracks.
Okay.
95% of the operators in this massive industry are what economists call unorganized.
Unorganized. That's such a polite sort of economic term. Let's define what that actually looks like on the ground.
For sure. When we say unorganized, we mean these aren't logistics corporations, like you might think of a FedEx or a DHL.
No glass towers and corporate headquarters?
Not at all. They are individuals. Let's create a character. Let's call our typical operator Ramesh.
Okay.
Ramesh owns maybe 2 trucks, maybe 5 if he's doing really well. He doesn't have an IT department. He has no corporate credit cards, no procurement team. He has a cell phone, a truck, and a whole lot of hustle.
And that is exactly where our deep dive begins today, because we are looking at a company that stared directly at this chaotic, cash-driven, fragmented mess and said, we can build an operating system for this.
Mm-hmm.
We are talking about BlackBuck, also known as Zinka Logistics Solutions.
And the timing for this conversation, it really couldn't be better. It's Thursday, February 12th, 2026. And just recently, BlackBuck released their Q3 FY26 results.
Right.
And for anyone who follows the startup world, especially in India, the numbers are, well, they're telling a very, very specific story.
They really are. They seem to have hit what you'd call a massive inflection point. I know inflection point is a bit of corporate speak, but in this case, the numbers actually back it up.
They do.
They posted a 51% jump in revenue, but, and this is the really important part, this is what made all of the headlines.
The profit.
They swung to a significant profit.
Which is, the holy grail for pretty much any tech startup.
Exactly. They aren't just a cash-burning machine anymore. They are actively trying to position themselves as the Amazon of trucking for India.
Right.
So our mission today is to look past the stock ticker. We're not here to give any investment advice. We want to understand the mechanics of it. How do you digitize an ecosystem that, for all intents and purposes, actively resists digitization?
Yeah.
We're going to unpack their asset-light model, this thing they call superloads, and of course, the risks that could still, run them right off the road.
It's a fascinating case study in digital transformation. So where should we start?
Let's do it. Let's go back to Ramesh, our hypothetical truck owner. I think we need to really understand the pain before we can even talk about the cure.
Good idea.
You said 95% of these guys are unorganized. What does Ramesh's day-to-day business life actually look like before a company like BlackBuck comes along?
Okay, so first thing is you have to get that image of a massive logistics corporation completely out of your head. The average Indian trucking business is, for all intents and purposes, a family affair.
Right.
It's Ramesh, maybe his brother, maybe a cousin. They scraped together enough capital, maybe took out a loan from a local lender to buy a secondhand truck, and then maybe a few years later a second one. It's very, very small scale.
So the margins must be just razor thin.
Extremely tight. There are about, what, 3.5 million? That's 35 lakh truck operators in India.
Yeah.
And about 75% of that entire market is made up of these small fleet owners.
Right.
Their single biggest problem, day in and day out, is efficiency, or, the total lack of it.
Okay, so walk me through a typical trip. Where does all that inefficiency actually happen?
All right, let's say Ramesh's driver. He drops off a load of steel in Mumbai. The truck is now empty. This right here is the single most dangerous moment for a trucker's business.
Because an empty truck is just a cost center, it's bleeding money.
Exactly. In the industry, they call it deadheading. Every single kilometer he drives empty. He is burning diesel, he's wearing down his tires, but he's earning 0 rupees.
Right.
He needs a return load, let's say back to Delhi, and he needs it immediately.
Hmm.
So in the old world, and frankly in much of the current world, he has to drive to a place called a transport nagar.
Which is what's like a physical hub.
Yeah, think of it as a transport city. It's basically a giant dusty lot filled with hundreds of brokers in these tiny, cramped little offices.
Okay.
The driver has to physically park his truck, get out, and walk from office to office, literally knocking on doors asking, hey, do you have a load going north?
That sounds like looking for a job in like the 1950s, going through the want ads in a newspaper.
It's exactly like that. The broker, he's got a notebook, maybe a Rolodex. He makes a few phone calls. If he finds a load, he'll take a hefty commission, 10, 15%.
And this all takes time.
It takes hours. Sometimes it takes days. And all the while, the truck is just sitting there. Ramesh is losing money.
And the payment side of this, I'm guessing that's just as messy?
It's a complete nightmare. Everything, and I mean everything, is in cash. The driver needs a wad of cash for diesel. He needs cash for all the toll booths, and you have to remember, India has a lot of toll booths.
Right.
He needs cash for food. If he needs to fix a flat tire on the side of the highway, that's cash. It is a high-friction, and maybe more importantly, a very low-trust environment.
Low trust is key there. Because Ramesh, the owner, is sitting back at home, right? He's not in the truck.
Right. Ramesh is at home, and he's worrying. He's thinking, is my driver actually buying the fuel he says he's buying? Or is he pocketing some of the money? Is he really stuck in traffic? Or is he taking a nap somewhere? Did he really pay that much for a tire repair?
So it's completely opaque. You have absolutely no visibility into your own business.
Zero. None. And the market size, the potential for fixing all this friction, it's just staggering. The total addressable market, the TAM, is estimated at around 20 to 25 lakh crore rupees annually.
Wait, what is that in dollars?
That's somewhere in the neighborhood of $240 to $300 billion.
That is a lot of zeros.
It is huge. But here's the real opportunity gap. Despite that massive size, digital penetration in this sector is still under 5, maybe 10%.
So low.
Most of this world is still completely offline. BlackBuck isn't trying to create a new market out of thin air. They're trying to bring an existing massive vital market onto the internet.
Okay, so that sets the scene perfectly. Chaos, cash, and a massive opportunity. Now let's talk about the solution. Let's talk BlackBuck. When I first heard of them, I have to admit, I assumed they were a trucking company. That they owned a big fleet of trucks with the BlackBuck logo on the side.
That's a really common misconception. But no, they are what's called asset light. They don't own a single truck.
So they own the platform that runs the trucks.
Precisely. You can think of them as the operating system for the truck owner. Or maybe the ever analogy is they're like a service station that follows the driver around on his phone.
Okay, I like that.
And they've built this entire ecosystem around 4 pillars of revenue. If you can understand these 4 pillars, you pretty much understand the whole business.
All right, lay them out for me. What's pillar number 1?
Pillar number 1 is payments. This is their anchor. This is the foundation of everything. And specifically, we are talking about tolling and fuel.
Tolls and fuel. Okay, so why start there? Why not start with the sexy stuff like the marketplace for matching loads?
It's all about frequency. Finding a load happens maybe once every few days.
Right.
Paying a toll can happen every 3 hours on a long trip. Buying fuel happens pretty much every single day. You build a habit, you build stickiness around these high-frequency use cases.
So what do they offer?
They offer FASTag, which is the mandatory electronic toll collection system in India, and they offer co-branded fuel cards.
And I've heard they're pretty big in this space, right?
Big is an understatement. They are massive. They currently hold a 33% market share in all truck toll payments in India.
A third. So 1 in every 3 trucks that goes through a toll booth is likely using BlackBuck's system.
That's right. And the commissions from these payments make up 43% of their total revenue.
That's incredible leverage. So they hook the trucker with the fast tag because, well, he needs it to drive. He has no choice. And then,
And then they have them on the platform, which leads us directly to pillar number 2, telematics.
okay, this is the tracking stuff, the GPS dot on a map.
Yes, but it's a lot more than just a dot on a map. It's vehicle tracking, for sure, but it's also things like fuel monitoring.
Ah, okay. That addresses the trust issue we talked about.
It directly addresses it. Fuel theft is a huge, huge issue for these small fleet owners.
So how does that actually work? The theft, I mean.
It's pretty simple. A driver might pull over and siphon off, say, 20 liters of diesel from the tank. He sells it to a roadside shop for cash. It happens constantly.
Right.
BlackBuck sells Ramesh, our owner, the sensor that goes right into the fuel tank. And that sensor tells him, in real time on his app, hey, your truck is stationary, but the fuel level just dropped by 10 liters.
That is an immediate return on investment for the owner. I mean, if I can stop 1 or 2 instances of theft, the device has paid for itself in a week.
Exactly. And this generates subscription fees for the telematics, for other app features, and that bucket makes up about 40% of their revenue.
Okay, so just to recap, nearly half their money comes from payment commissions, and another, 40% comes from subscriptions for tracking and other services. That sounds like a really stable base.
It is. That's what they call their core business. It's predictable, it's sticky, but then you have the growth business, which is where things get really exciting.
Yeah.
And that brings us to pillar number 3, the loads marketplace.
This is the one you called the Holy Grail in our notes.
It absolutely is. This is the dream of connecting the truckers directly with the shipper. It's a whole Uber for trucks moment. And they have a specific product for this called Superloads.
Superloads, it sounds like a team of superheroes, but functionally, how is this any different from just a digital version of that broker's dusty notebook we talked about?
That is the key distinction. A digital notebook, like a classified site like a Craigslist, it just lists information. I have a truck here, I have a load there. You still have to make the call, you still have to haggle on price, there's no guarantee. Superloads is what's called a managed marketplace. BlackBuck actually manages the entire transaction.
So they're not just a bulletin board.
Not at all. They match the load, they handle the pricing algorithmically, they guarantee the booking, they manage the payment, they take the friction out completely.
And I imagine that helps a lot with the deadheading problem.
That's the main goal. The app can see that Ramesh's truck is about to arrive in Mumbai, and it can start looking for a return load to Delhi for him before he even gets there.
Very cool. Okay, and finally, pillar number 4.
Pillar number 4 is vehicle financing.
Loans. Okay, this feels like a bit of a pivot. Why does a logistics app suddenly want to become a bank?
It's not so much a pivot as it is the final piece of the puzzle. It's the enabler. Remember, we said Ramesh is basically unbankable to a traditional big bank.
Right, he doesn't have the paperwork, the credit history.
Exactly. Yeah. But BlackBuck has something better than paperwork. They have his data. They know exactly how much his truck drives. They know it pays its tolls on time. They know its fuel efficiency.
Yeah.
So they can partner with lenders to facilitate loans for him to buy his next truck.
Then they take a cut.
They take a service fee, yeah.
Yeah.
And that makes up about 17% of their revenue right now.
So it's a completely closed loop, a full life cycle. You buy the truck with a BlackBuck facilitated loan. You track it with their telematics. You pay for your entire trip with their fast tag and fuel card. And you find all your cargo on their marketplace.
That is the ecosystem play.
Yeah.
And that ecosystem, that flywheel, is what has driven their really incredible financial turnaround recently.
Let's get right into that because, as we mentioned at the top, startups are famous for one thing, burning cash to grow, the whole growth at all costs mantra.
Right.
But BlackBuck seems to have just flipped a switch.
They have. And the numbers from Q3 FY26, the ones they just released, they really tell the story. Their revenue was approximately 172 crore rupees. That's up 51% year over year.
Which is very healthy growth. But what about the bottom line? That's the big question.
This is the headline. They posted a net profit of around 31.7 crore rupees. Now, compare that to the same quarter the previous year.
What was it then?
It was a loss of 48 crore rupees.
Oh, so from minus 48 to plus 31, that is a massive swing. How on earth did they pull that off? Did they just fire half their staff?
No, Actually, it's something much more fundamental to their business model. It's a concept called operating leverage. And this is really crucial for listeners to understand when you're looking at any platform business.
Okay, let's unpack that. Operating leverage. Break that down for me. How does it work here?
So BlackBuck is a tech platform, right?
Hmm.
They had to spend a lot of money up front to build the software, maintain the servers, and pay their engineers. Those costs are what you'd call semi-fixed.
Meaning they don't go up in a straight line with every new customer you add?
Exactly. It costs them roughly the same amount of money to maintain the app, whether they have 10,000 truckers using it or 100,000.
Right. The core infrastructure is already built.
It's built.
Right.
So once you get enough revenue to cover those fixed costs, every additional rupee of revenue flows almost directly to the bottom line. And BlackBuck has incredibly high gross margins in its core businesses. We're talking around 93%.
93%. Wow.
So as they added more volume, more truckers paying tolls, more subscriptions, their costs didn't go up nearly as fast as their revenue did.
I see. So the profit margin just naturally expands as they get bigger. It's baked into the model.
Correct. And we saw evidence of this earlier in the year. In Q1 FY26, for example, their adjusted EBITDA, which is a measure of profitability, it went up 4 times.
4 times.
4 times on just 56% revenue growth. That right there, that is the very definition of operating leverage kicking in.
It's like the moment a rocket ship finally clears the Earth's atmosphere and the engines don't have to struggle so much against gravity anymore.
That's a perfect analogy. And they've also been very smart about how they structure the business internally. They have this clear split we talked about between their core business, that's payments and telematics, and their growth business, Superloads and financing.
The core is the cash cow.
Yes. The core is their engine room. It's growing steadily, about 31% year over year, and it's highly, highly profitable. It generates the cash that funds all the experiments. The growth business, on the other hand, is just exploding. It grew 271% year over year in Q3, but it's still in the investment phase. So they're using the profits from the boring, predictable stuff tolls and fuel to fund the really exciting high growth stuff, the marketplace.
That sounds like a very mature strategy for what is still a relatively young company, but I have to, I have to play devil's advocate here for a minute.
Please do.
Why can't someone else just copy this? I mean, big banks issue fast tags. Google Maps can do tracking. There are hundreds of lending apps out there. What is the moat here? Why can't an HDFC bank or a Google just come in and crush them?
That is the billion-dollar question, isn't it? And I think the answer really lies in 2 main things. What I'd call the ecosystem effect, and something people often overlook, which is physical presence.
Okay, let's start with the ecosystem effect.
Sure, a bank can sell you a fast tag. That's true.
Yeah.
But that bank has no idea where your next load is coming from.
Right.
Google can track your truck's location, but Google isn't going to give you a loan to buy a second truck. BlackBuck offers the entire bundle.
So it's the convenience of just having it all in one app.
It's more than just convenience. It becomes a kind of dependency.
Yeah.
If a trucker is already using their fast tag, it's just really easy to start using their fuel card too. If he's using the fuel card, he might as well install the telematics to stop theft. Once the telematics are installed, his truck is now visible on the network, which makes it much easier for the algorithm to match him with a load. It's a self-reinforcing cycle, a flywheel.
And do the numbers back that up? Do people stick around?
They do. Their data shows they retain over 66% of their trucker cohorts, even after 3 years. Now, in a market as fragmented and chaotic as Indian trucking, that level of retention is just incredibly hard to achieve.
Okay, that's powerful. You also mentioned physical presence. I'm a little confused by that. I thought this was a digital company, an app.
It is, but India is what you'd call a phygital market. It's physical plus digital. You can't just launch an app in the App Store and expect truck drivers in rural Bihar to find it, download it, and figure it out on their own.
Right, you need boots on the ground.
You need a lot of boots on the ground. BlackBuck has over 9,300 physical touchpoints across India.
9,000. What are these touch points? Are they offices?
They can be small kiosks. They can be partner agents at fuel stations. They can be sales guys walking around the transporting cars. They are physically present where the truckers are. You cannot replicate that kind of ground game overnight, no matter how much money a company like Google throws at the problem.
That is a serious barrier to entry. It kind of reminds me of how Amazon, in the early days, built out this massive network of warehouses while everyone else was just building websites. The physical infrastructure really matters.
Precisely. And then there's the final piece of the moat, which is data. They have collected data on somewhere between 12 and 15 million trucks in India.
Wow.
They know where those trucks are, they know when they're empty, they know how fast they drive, where they stop for tea.
And that data is what allows them to price a loan better than a traditional bank can.
Yes, because a bank looks at Ramesh and sees a guy with a truck and no formal credit history. He looks like a high risk.
Mm-hmm.
BlackBuck looks at Ramesh and sees a guy who has completed 20 trips this month, paid all his tolls on time, and drives safely and efficiently. He looks like a low risk. They have an information asymmetry advantage, and it's massive.
That is powerful. But, as with any deep dive, we have to look at the dark clouds on the horizon. It can't all be sunshine and open highways.
No, not at all.
What could derail this truck?
There are significant risks, and they are not trivial by any means. I would probably categorize them into three main buckets: regulatory, cyclicality, and competition.
Okay, let's start with regulatory. Since they're so deeply tied into government systems like FASTag, the government must play a huge role in their fate.
A massive, massive role. A huge chunk of their core revenue comes from those commissions on toll payments.
Right.
Those commission rates, what's called a merchant discount rate, or MDR, are determined by the government and the banks. If a bureaucrat in Delhi decides to sign a paper that cuts the MDR, BlackBuck's revenue and profit take a direct hit instantly.
And they have no control over that.
Zero control. They are a price taker. So a politician could wake up one day, decide it's good policy to lower tolling fees for truckers, and BlackBuck's entire business model gets shaken up.
So a single stroke of a pen in Delhi, and their profit margin just shrinks overnight.
Exactly. And we actually saw a small glimpse of this kind of regulatory impact in their Q3 FY26 results. They took a 3.8 crore rupee hit directly related to new labor code compliance.
Ouch. What was that about?
The government is quite rightly trying to formalize the labor market, which is good for the country and for workers in the long run, but it increases costs for companies like BlackBuck that rely on large, flexible workforces of agents and partners.
Okay.
And then there's the lending arm. It's an NBFC, a non-banking financial company. That puts them directly under the thumb of the RBI, the Reserve Bank of India. And the RDI has been very, very strict lately about unsecured lending.
Right.
If the RBI decides to tighten the screws even further, BlackBuck's entire financing growth engine could just freeze up.
All right, so regulatory is a big flashing red light. What about the second one, cyclicality?
Trucking is the absolute heartbeat of the economy. If the economy is healthy, if factories are producing goods, if people are buying things, then goods move and trucks move.
But if there's a slowdown,
If we hit an industrial downturn or a recession, freight volumes drop off a cliff.
and if the trucks don't move,
They don't pay tolls. They don't buy fuel. And they certainly are not taking out loans to buy more trucks. BlackBuck's revenue is fundamentally a derivative of the health of the Indian economy.
and because of that amazing operating leverage that we were just praising a few minutes ago,
It works in reverse. If revenue drops by 20%, those high fixed costs are still there. Profits can vanish incredibly quickly. It's a double-edged sword.
right, the rocket ship can fall back to Earth just as fast as it took off.
Yeah.
And what about the third risk, competition? You said they have a strong moat, but is the castle completely safe?
The castle is strong, but the walls are definitely being tested, specifically in the payment space. They have a 33% market share in tolls. That is an incredibly high number. But it also signals that the market is becoming saturated. There just isn't that much more room to grow in tolls. You can't get to 100% market share.
So they have to make the other parts of the business work.
They absolutely must succeed in Superloads and in financing. If those growth engines don't scale up to become a much bigger part of the business, the company's overall growth will just stall out.
And tech disruption.
And then there's always a tech disruption angle.
Right.
Some new startup with a smarter AI or a blockchain-based model could theoretically build a more efficient platform without all the legacy costs and the 9,000 people on the ground. It's a constant threat.
It's the classic innovator's dilemma. So knowing all of that, the massive opportunity, the clever ecosystem, and these really significant looming risks, where does the road lead from here? What's the future for BlackBuck?
Well, the immediate future for the next year or two is all about expansion. We talked about Superloads, their managed marketplace.
Right.
Right now, believe it or not, it's only active in 9 cities.
Only 9. That seems surprisingly small for a company that's seen as a national player.
It is, which just goes to show you how much runway they have ahead of them. They're targeting 14 cities by June of 2026. They're being very deliberate about it, moving city by city to make sure they build up enough supply and demand, what's called liquidity in the marketplace, before they expand further.
And what about penetration within their existing user base?
That's probably the biggest growth vector of all. They have data on 12 to 15 million trucks, but they only serve less than 1% of them in a really deep way.
I see.
So the big goal is deepening penetration, getting that guy who just uses the FASTag to also sign up for the fuel card and then install the telematics and then take his first loan, cross-selling him through the entire ecosystem.
And the financing piece seems to be growing fast.
It's rocketing. Dispersals are up 35% quarter over quarter. If, and this is a big if they can manage the default risk properly, this is a high-margin goldmine for them.
There's also a much bigger sort of macro trend that's helping them, isn't there? This whole digital shift in India.
Absolutely. That is the tailwind pushing this whole truck forward. Smartphone penetration among truck drivers has basically doubled, from around 30% in 2020 to over 60% here in 2026.
So the driver is now online.
The driver's online, he's on WhatsApp, he's watching YouTube videos, and he's ready and willing to do business on an app. That was not true 5 or 10 years ago.
Plus, you have the whole formalization of the economy. Things like GST, e-way bills.
Yeah.
The government is making it harder to be a cash-only, shadowy operator.
Exactly. The government is pushing for transparency and digitization, and BlackBuck is basically selling the shovel during a gold rush. They're the tool that helps these millions of small truckers comply with the new rules and become part of the formal economy. It's a very powerful tailwind.
So if we were to summarize our whole deep dive today, BlackBuck is not really just an app. It's more like a digital infrastructure for a massive, invisible, and vital part of the Indian economy.
That's a great way to put it. And they've now proven that the financial model can work by turning that corner from burn to earn in fiscal 26.
And the model is pretty clear. They hook you with the high-frequency payments, they keep you on the platform with data and telematics, and then they grow with you through the marketplace and through loans.
It's a classic ecosystem play. But I want to leave you and our listeners with one final and maybe slightly provocative thought.
Okay, let's hear it.
We always hear that cliche, data is the new oil, right? It's kind of meaningless now. But for BlackBuck, I think the phrase is actually different. For them, data is the new collateral.
Data is the new collateral. Okay, unpack that for me.
Well, think about it. Historically, our truck driver, Ramesh, he was unbankable. Why? Because he had no collateral. He didn't own a house to mortgage. He didn't have a steady paycheck stub to show a bank manager.
He was a ghost in the formal financial system.
A complete ghost. But by digitizing his every movement, every toll paid, every liter of fuel bought, every load successfully delivered, BlackBuck has turned that ghost into a trackable, predictable, credit-worthy business unit.
The data itself is the asset.
The data is the asset that allows him to access capital and grow his business. They're literally turning the exhaust fumes and the tire tracks on the highway into a credit score.
That is a profound way to think about it, and it raises a final, really big question for the future. As BlackBuck captures more real-time data on the physical movement of the Indian economy than perhaps even the government has, what do they actually become?
Right.
Do they stay a logistics company, or do they eventually become a massive fintech bank that just happens to have started by serving trucks?
And if they do, what happens to the millions of brokers and middlemen and all the other people who relied on that old, inefficient, cash-based system to feed their families? It's a transformation that creates winners, but it will inevitably create losers too.
That is the story of every industrial revolution, isn't it? Digital or otherwise.
It is. Well, next time you're out on the highway and you pass one of those beautiful, colorful trucks, maybe take a look at the windshield. See if you can spot the little FASTag sticker.
You might just be looking at a single data point in one of the biggest and most fascinating digital experiments happening anywhere in the world.
It definitely changes your perspective on a long road trip.
It sure does. Thanks for listening to this deep dive. We'll catch you on the next one.
Safe travels.